In today's video, I'm going to be sharing with you 3 ways that you can invest in property online. These ways are literally designed for anybody to be able to start investing in property, and the best part is that you only need at least 100 Rand to start. So to show you these 3 ways, I'm going to share with you my computer screen so that way you can see exactly what I am doing. So let's go. So the first way to invest in property online when you have something like 10 Rand is to use real estate investment trust. So we call these REITs for short, and so that's what I'm going to call them for now. And so REITs are very simple to invest in. If you're using a platform like EasyEquities, you'll just click on Invest Now, and then you'll click on Equities, and then you'll scroll down to the category tags, then you'll search here and then find Real Estate Investment Trust. And this will give you a list of the shares that are REITs. And so what REITs are essentially are companies that own property. They collect rent from those properties, and then they distribute that rental income to shareholders. Now, legally, REITs have to distribute a large portion of their income to shareholders. Generally, it'll depend on the country that they're in. So for example, if it's an American company, they have to distribute something like 75% of the money. If it's a South African company, it's generally about 85 to 95% of the money. They have to distribute it to shareholders. However, under exceptional circumstances, such as what happened in 2020, REITs can withhold the distribution. And so in order to help them basically survive any sort of difficult situation. So South Africa does have quite a few REITs. Some are very popular. Most of them are in retail and commercial space, meaning they own malls, shopping centers, and office parks. But there are a few that dabble in residential property. For example, Indlu Place is pretty much the sole residential property REIT on the JSE. So if you want to invest in a REIT, this is where you're going to buy them. However, you have to do your research on the REITs that you want to buy. So let's say we go to Indlu Place's website. What we'd want to do is go to the investor relations, read up a few things that they say about themselves, understand the finances of the REITs, so understand the finances of the company, and then obviously look at their portfolio. So for example, we'd go through their portfolio. I can see they've got student buildings here. They've got stuff in Johannesburg West, East, the inner city and the north, and Soweto and Witbank. So you can scroll down, read like obviously a few things about the place, see the pictures of the buildings that they own, and obviously there's a lot of information you can get on their website about their portfolio. Maybe let's go to see Growth Point, right? So Growth Point's on Growth Point's website right now, and we can see quite a lot of things about the business, read about the business. Growth Point, of course, is one of, if not the biggest real estate investment trust in South Africa, and we can see the various industries that they're in. They're in office, they're industrial, retail, they're in healthcare, trading and development, and they've got the ownership of half ownership of the V&A waterfront, and they've got a student accommodation REITs that they own as well. So they're in quite a lot of things, and if you are a shareholder of this particular company, these are the properties you would own, so you can gather a lot of information about them. They've got a very large portfolio, and yeah, it would take quite a while to go through the whole websites just to see their portfolio. However, REITs do have risk, and the main risk with the REIT is that they trade like shares. And what I mean by that is, just like share prices go down and go up, REITs share prices do the exact same thing on a daily basis, just like any other share. So if you invest in a REIT, you gotta research and make sure that the share price has potential for long-term growth, because you don't want to buy a REIT and have the share price drop in value, because that's just gonna stress you out. Even if you're earning a really nice dividend, it's still just going to stress you out. So I'll quickly just switch on the filter here. I can see a list of dividend yields that are being paid by South African REITs. Some of them are very nice, like the Dipula Income Fund, they pay 23%. Fairvest Limited, they pay 14% per year. By the way, this is all per year. Octodec Invest, they pay about 12%, and other REITs pay even higher amounts. However, their share prices is what also matters, because you don't want to invest in a company that has a share price that's going down, even though it's paying a pretty decent dividends. So that's just something for you guys to be aware of, that's the main risk when you invest in REITs. But nonetheless, REITs are very cool, and obviously they're available in any country. So you don't just have to buy South African REITs, but you can buy REITs from pretty much anywhere in the world. And if you're using, let's say, EasyEquities account, you'll find REITs from the US, Australia, and a few other places as well, and ETFs that have a lot of REITs. So let's look at the second way to invest in property would be to use something like Easy Properties, right? This is one I'm sure that a lot of people know, and Easy Properties is very simple. All it is the Easy Properties team. They look for properties. So some property developers will submit a property to Easy Properties, or the team will look for properties and then they'll list the properties on the platform. And the way that works is when you buy shares of a property, you're basically buying part ownership of a particular property. And the nice thing about these properties that you can see their addresses, you can go view them. You know, a lot of them are really nice looking properties, and you get a lot of information about them as well in terms of like how you can expect that particular property to perform financially. So you can just go on the website, see the listings that they have. Let's see if there's any new listings. Cool. Yeah. So there's some new listings, get some information. So like the funding target, obviously, let's just view, save view property so we can see exactly what we are working with on this particular one. This is a Saxon Square. Pretty cool. And each share of a property is worth R1, right? So that's the starting entry. So literally, if you bought one share, that's fine. You can literally invest R1 in the property and be a property owner. And the platform gives you a lot of information. You know, it gives a description, the investment case about the particular property, and then the area that the property is in, the sort of growth properties have had in that area, and then obviously the floor plan, and then the financials, which is quite key. Now, there is one hurdle with Easy Properties. I love it. I use it. In fact, most of my property portfolio investing is in Easy Properties, but there is one hurdle, and that is it's really suitable for people who want to invest in the long term, because you can't just sell your shares of the properties that you buy. They have to open up the auction in order for you to actually sell them. And that can sort of feel restrictive if you're somebody who wants to have the ability to get in and out of an investment whenever you want to, which is fine. Property is meant to be a long-term investment anyway, in most cases. So to get locked into an auction for a couple of months, to get locked in and not be able to sell for a couple of months is fine, because you're really investing for the long term. And of course, you get a distribution, meaning you get paid your dividend. They have a calendar here, a dividend calendar that basically tells you when certain properties are paying out. That way, as an investor, you are always aware of when you should be expecting your money to arrive in your Easy Properties account, and then obviously withdraw it to your bank account. The third way, and this is a way that most people actually are not aware of, something called a mortgage security. So not a mortgage-backed security, but a mortgage-based security, in the sense that there are companies such as Real Estate Investment Trust that are not in the business of buying properties, but instead are in the business of lending money to people who want to buy properties, such as people who want to buy residential homes. And so there's quite a lot of them. And so I've moved to a platform called Trading 212, which is obviously a global platform. So you're not going to find this on EasyEquities, but there's a lot of mortgage-based businesses that make money from lending out money to people who want to buy properties. So basically investing in home loans and other types of loans related to property as well. And so most of these are American and other global entities. And so there's quite a lot of them. Mortgage Capital, so if it's, for example, an ETF like the iShares US mortgage-backed securities, where basically you got securities that earn interest. So those are bonds that earn interest based on mortgage interest. You got something like your New York Mortgage Trust, basically lending out money to people to buy homes, and then you can earn interest from that. That's a really cool way for you to invest in property indirectly, basically be the bank that lends people money instead of being the person borrowing money from the bank. And obviously the way you make money from these is very simple. The growth in the share price, that's key. And then obviously the interest that you will earn, or the dividend that you'll earn from a company that's in the mortgage business. You can obviously buy ETFs as well that are in that space. So something like the Vanguard mortgage-backed security ETF, that's something that you can buy and then be able to be somebody who's invested in mortgages that way. And so that's something that you can do, and that makes investing in that space pretty simple. So those are your three ways to invest in property online. Out of these three, which are my favorites? or which is my favorite, I'd definitely say Easy Properties is my favorite, simply because it's very easy, transparent, it's easy to understand what is going on at any given moment. And there's a group of professionals doing the research on the properties and making sure that whatever properties end up on the platform are high quality properties. So I do like that way. REITs used to be my favorite, but South African REITs for the past couple of years have been a nightmare. In fact, one of my biggest losses is in a South African REIT. But anyway, that's all I have for today. Enjoy your day, everybody, and goodbye.